And welcome back to Bitcoin Advisors channel, where it is bright and sunny, a beautiful day out here in Westlake Village, and literally I couldn't ask for a better day of price action. I'm going to jump right into it on the 5-minute time frame. No, you guys aren't trading on the 5-minute. So let's take a look at the 4-hour. What do we have here on Bitcoin? On Bitcoin, we're going to go over some really fun stuff, including the moon signals, which I don't know if you've ever heard about the moon signals, but I don't believe in that garbage. But what I do believe in is, statistical probability. And if the signal works out, it works out, right? So what do we have on the board right now on the 4-hour time frame, which I was covering yesterday? I put out a little TikTok video. Another thing, I'm not a big fan of TikTok, but we're getting a lot of fans and having a lot of fun on there, so feel free to check us out. I had a target in there yesterday of 18,518, where I was putting in a little take profit. And what happened? Take profit zone was, we're that far off, right? So the great old saying is close enough is close enough. So, and really quick, if I didn't take profits, I think somewhere around here, I think I did take profit somewhere around here. That would have turned into some realized losses really quick. We got this moonshot signal at the end of the day yesterday. A bit of a backfill. Maybe it was the El Salvadorian president. He bought 80 Bitcoin yesterday. I don't even know how that made the news. 80 Bitcoin. 80. That's not a whole lot of Bitcoin. I tweeted a comment and said, hey, look, you better break the lock off your wallet, Mr. Guy from El Salvador, because 80 Bitcoin ain't a whole lot of Bitcoin. But at least he is buying and cost averaging in on the market lows, because I'm pretty sure El Salvador started buying Bitcoin when it was around $40,000. And again, anyways, needless to say, on the 4-hour time frame, that target almost got hit. Close enough is close enough, and the fib is still in place. So what do we do? We came back, we tested the, remember, and actually if you go off of candle bodies, look, it hit perfectly. So candle bodies is more conservative. If you go based off of the wicks, from the wick low to the wick high, it's a little more aggressive, right? And so what's happening right now, we're consolidating in this zone, and I would suspect we get more of the same, which is lower lows, lower highs, and we're probably going to come down, retest this area. If it does break, I'm looking for 17.5 to get hit. So any kind of a 4-hour closure back below 18.8. And I'm looking for us to revisit the lows around 17.5 to 17.6. 17.6. Call it 17.6 or 18,000 to be more conservative. Something like that. I don't necessarily know if we're going to break down completely. How would I verify a complete breakdown here? And I'll just tell you right now, it's real simple. Any kind of a daily closure below, and we'll just use our fib targets again. And why don't we use candle bodies, right? And be more conservative. So any kind of a daily closure back below here at 18,900, and I'd be looking for a move down to 17.7. Any kind of a daily closure below 17.7, I'm looking for a quick move down to 15,000 and, a small bounce. And then over time, somewhere down into this zone around $11,000. And that would be that. The other thing that I just mentioned was the moon signals. And what do we have here on the moon signals? Boom, these are the moons, right? So what happens every 2 weeks? Apparently every 2 weeks, there's a new moon. I don't even know what it means. I don't study that stuff, but all I know is when this chart goes off, when we get a bear moon, these are the bear moons at the top, and the bull moons are at the bottom. So when we're in the context of a downtrend, right, making lower highs and lower lows, The bear moons are going to fire off, much better signals than the bull moons, right? Even though this was a good one, this was a good one, this was not too good. But let's just look at the last 2 bear moons. What happened? 3 bear moons. Why don't we check the last 3, 4 bear moons, 5? I mean, it's pretty insane here, but I'll just show you here. So if you just took the signal blindly from the bear moon right here to the next bottom, that was a 30% retracement. Let's see, what else? This one, from the signal given, oh, that didn't work. How do I make my little thing just keep working? From the signal given, which would have been right here, to the next low, that was down 40%. Okay, we just had another bear moon, just right here. So if you took it from when it fired off yesterday, and I'm still not able to lock in my thing so that it just keeps on, anyways. 40% down would put us right here at 11,000, 45. And that's just if we have a comparable move. Also, what you will know is what's called a bear flag, which these things tend to play out like this, right? So you can, oh look, now it wants to work. Huh. Anyways, I'm gonna unlock my thing here. And, okay. So bear flag. What does a bear flag? What does a bear flag look like? Well, it looks like this. From the low to the high, right? From the high to the low, excuse me. This would be your bear flag. And what happens is you draw a few more. Oh, we'll use this here. So we had this bear flag coming in here, and it was coming in like that. And what happens is, if you just line this up like that, there's your bear flag. What do you know? That's pointing down to our $15,000 target. And you can see there's lots of bear flags. Actually, there's another bear flag. I'm going to take the moon phases off now and just showed you that. So that moon just went off yesterday or 2 days ago. We got the new moon, and was it a full moon? Was it a blank moon? I don't know, but that's the moon signal. Bear moon. Bear moons are at the top, bull moons are at the bottom, okay? But here is another giant bear flag. We're talking a massive bear flag here, like that. Remember, 3 points on a trend line. What does that do? 3 points creates a trend. That would be something like this, right? You can draw this all the way back there. That is a bear flag. Where is this pointed down to? I'm going to take those moons off now. Where does that point down to? Ooh, nasty, 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 nasty. What else does that line up with here? Okay. What else does that line up with? Well, our good old fib tool right there. From the high to the low, from the, low to the high on a bearish retracement on that last major consolidation. That is what it looks like. And that gives you that target down somewhere around here, okay? And yeah, I mean, it almost lines up to the T, coming in right there, 8,000, something like that. $8,000. That is a pretty darn nasty signal there. But that's the opportunity, guys. If the price goes down that low, we're all going to get a chance to get rich again. We're all going to get a chance to buy the market lows. Again, not a financial advice. I'm not a financial advisor. But if we do something like that, it'll look a lot like Amazon, which I don't know if you guys follow any stocks, but AMZ, Amazon, where's the ticker? There we go. And why do I say it looks like Amazon? Well, I'm not talking about Amazon today, which that's pretty nasty itself. I mean, where are these targets lining up here? It's funny how those fibs work out, right? I mean, look at that. From the low to the high, and we came right in there, tagged the 1618. Now we're breaking back down below it. Next target for Amazon down to $73, by the way. Or if you just do it based off of this massive consolidation. Yep, same kind of deal there. Targets are coming down. Amazon down to $70 over time. And that's right in line with some other bearish things. I'm going to throw it on the board. And this, I guess, isn't the funnest call for the day. But another thing I wanted to point out real quick is the 6-month closure. Now, the higher the time frame, the higher the time frame, the more powerful the signal is, right? This is a bearish engulfing candle. Bearish engulfing. This is the NASDAQ, by the way. So from July of 02, from July of 09, we're from $1,000 to $16,000. This is a parabolic blow off top. When you have a bearish candle like this with high volume, that's confirming we're going to go lower, okay? It's confirmation. It's in. Now, is that a guarantee? No. Am I giving financial advice? No. But my next target on NASDAQ is going to be somewhere around 8,450. Only time will tell what actually happens. What else was the big story yesterday? Inflation came in at, the PCE came in at 4.7%, which is lower than expected. It was expected to be a bit higher. I think they projected it at 4.8 or 4.9, and it came in at 4.7. So lower than expected. That's the inflation number that doesn't include food and energy, things like gasoline and milk and bread that we need to survive. Hey, why would that matter? Why would you want to calculate that in inflation? I don't know. But Mr. Powell seemed to say that, I saw this funny meme like 2 months ago. It was like, hey, don't worry, we're gonna have a soft landing. Inflation might go higher. The next month, inflation is gonna go higher, but don't worry, your stocks aren't gonna crash. Inflation comes in higher. He says, all right, stocks crash, don't worry, your real estate won't crash. Next one is, we're not gonna have a recession. Don't worry, we're not going into depression, and so forth. So anyways, Amazon had a parabolic blow off top. So did NASDAQ. And the one I was bringing up here is Amazon back in 2002, if I can get the right graph up. What happened in 2002 to Mr. NASDAQ? That's what happened. That's what happened to Mr. Amazon from the high to the low, the dot-com bubble. And this reminds me a lot of the dot-com bubble, right? This has been the crypto bubble, where all these new things come out, Celsius, BlockFi, Shiba Inu coin, Doggy coin, all these other coins that are a bunch of garbage out there, right? You need to wipe out the garbage to for the strong to survive. It's the strongest that survive. Bitcoin's doing its job. Every block is minted on time. Everything is going just as planned. Who cares about price? And again, with Amazon, whether you bought at $3 or you bought at 50 cents, who really cares today now that it is at $108? Just like Bitcoin, whether you bought at 40,000 or 20,000 or 10,000, who cares 10 years from now when it's at $1 million, right? What matters is that you bought and you diversified and you caught the trend. And back then, Amazon, Apple, these tech stocks, right? A lot of people said, that internet's just a bunch of garbage. Well, just like today, literally just like today, I hear people say it every day on the phone. You call them up and you say, hey, it's Chris from Bitcoin Advisors. And they go, I hate Bitcoin. Bitcoin's from the devil. Or something real stupid. and they're just sorry. Ignorance doesn't pay you. So, anyways, needless to say, parabolic blow off top in .com bubble, and here we go. Here's the 6-month chart on Bitcoin. Let's pull up the BLX index, the oldest price history for Bitcoin. By the way, if you want to set up a trading view, there is a link in the description below. That's the first thing, that kind of the first step to start following these assets is setting up a trading view account, getting all your indicators in line. You can get the RSI, the stochastics, the BBWP, all free indicators. And I show you step by step on how to set up trading view so you can begin to follow along. Let's jump in here to BLX. Where is it? There's too many signals here, too many signs. BLX, there it is. So that's Bitcoin on the long scale. And you can still see, long-term bullish, right? Long-term, we're still bullish. But when you get a candle like this, bearish engulfing, closing below the 9 exponential, which just closed yesterday, the next move down is to the 21, which is coming in right there at about $11,000. So can we get a wick down to 6,000? Very, very likely. I think so. In these volatile markets, yep, you could see something like this. And this is best case scenario. And this is probably what does happen, right? We do get a wick down, and then we march it back on up to those new highs. Every candle here in the 6-month chart represents 6 months of price action. So could it take maybe 2 more candles for us to make some new highs? Yes, I think it could take 2, it could take 3, and I don't really care how long it takes, as long as it happens. And what we will have is some hidden bullish divergence if we can confirm this as a local low. So that's on the 6-month time frame. Let's check it out on the 3-month. Same thing. We will have hidden bullish divergence, which is where price is making higher lows, but RSI is making lower lows, and that would come from this. As long as we do not crack below 7,000, which is right. As long as we don't crack below 7,000. Then we will be, or as long as we don't close below 7,000, $6,300 on a quarterly time frame, then yes, hidden bullish divergence, price is making higher lows, RSI is making lower lows, and that would give us a shot, back to the top side of the range, and that's coming in probably around $40,000 at a minimum. Call it, if not 40,000, a shot back up to about $60,000. That would be the top side of the range here. So that being said, I'm wrapping it up. Wishing you all a happy 4th of July. Enjoy your family, your friends, some hot dogs, some whatever you're gonna barbecue, some fireworks. Thanks for watching the channel. I really do appreciate you. And don't forget, hit the like, subscribe button, press a comment, do a comment, ask a question. I would love to get back to you. Signing out. Take care.